Everyone has a criteria or a model around their investments, but almost no one has a criteria or framework around where they save and hold their cash. I'm Kyle, and I help people build models and systems around banking, tough money, and generational wealth. And in this video, I want to break down exactly what makes whole life insurance so unique as a foundational asset, why I believe you cannot find a more efficient, beneficial asset to place at your foundation. And when it comes to investing and holding wealth, there's really only two major key components to wealth building. You got the foundation side and you have the acceleration side. The green box is what you hold to use for investments, and the gold side is what you invest in or what you use to accelerate to reach your freedom numbers. Now, if I were to ask a room full of people, what's your investing criteria? Would you invest in an asset that only earns 4 or 5% a year? Most of the people would say no. They would say my invest criteria has got to yield 8, 10, 12%. I go to the stock market, I go to real estate, I look for cash flow, I look for these areas. Everyone has a criteria for investing their money. Now, if I were to say, what's your criteria, what's your standard for where you hold your cash reserves? Silence. No one really has a thoughtful framework around this. And this is a huge missed opportunity. This will cost the average American hundreds of thousands of dollars, if not millions of dollars, by just not understanding how to have a more thoughtful wealth foundation. So let's break this down. When we go back to this framework, one of our favorites called the path of money, there's really 4 things we can do with money. We can spend it, donate it, hold it, and invest it. Now, where you hold or save money makes a remarkably big difference in your wealth building plan. And that's exactly where life insurance exists, is in that liquid, safe category. Remember, whole life insurance is not an investment, it has nothing to do with investing. This is the biggest misconception about that asset. Now, when you start looking at where am I storing my liquidity, liquid safe dollars, that could include actual cash that you may keep in a safe at home or underneath your bed or in a shoebox in the closet, whatever that is. Now, actual cash in your home is the most liquid and the most accessible form of cash you have. You can get to it right away. And I think that's a smart play, having some cash in your safe at home. But you don't get yield, right? You don't open up your safe door or check the shoebox and suddenly there's more cash in there. So you give up any type of growth, but you have maximum privacy and maximum liquidity. Now, if we go to like a commercial bank and we have a high yield savings account, we're going to have lots of liquidity, so it's accessible. Hopefully, we're getting an interest rate on those dollars, but we lose the privacy piece of it now. And so any liquid, safe environment, you're probably getting 2 to 3 benefits at max. And this is why it's so important to go through some of our tough money curriculum through our workbook, because we have an entire chapter dedicated to where are you saving liquid, safe dollars, and could there be a more efficient environment that's going to maximize more of the benefits that you deserve, because all of us are working really, really hard for our money. So any environment that you're saving in is only going to give you 2 to 3 benefits max. And that can include treasuries, gold and silver, so precious metals, savings accounts, CDs, actual cash. And when we go over to life insurance, one of the reasons that I became so interested in this asset is because it came with so many benefits built into one place, and this is what makes this asset so tough. And when I really break down these 8 benefits, which I have not been able to find these benefits in any other singular liquid safe asset or even investment for that point of view. And that's what I've loved about owning this at my foundation, is it gives me some really unique advantages to the money game. And I would say the strongest, biggest benefit you get is contract for the rest of your life that comes with guarantees. Guarantees that you will always have a death benefit. Now think about this. We have a 100% chance of passing away in this life. So life insurance is one of the few insurances that you'll own that you have a 100% chance of using. So you get a guaranteed death benefit. That could be used for debt payoff, legacy planning, or even distributions later in life. There's a lot of different ideas and strategies you could implement with that. Next is your guarantee that your cash values can increase every single year. Now, not every insurance carrier in the U.S. will give you these benefits, so you got to make sure you're using the right ones. there's about 7 carriers you could use that are going to give you all these benefits that we're talking about today. And with a very, very good track record of success, you can sleep well at night knowing your policies are going to perform. And the last guarantee is level premiums. So you're guaranteed that your premiums never go up in the future. This is a huge hedge against inflation and gives you a lot of certainty and peace of mind because you get to lock in a certain premium and that'll never increase over your life. So this is one of the reasons why banks and large corporations love this type of asset. It's why I've loved it as well, because it brings a lot of certainty to my financial life, and you want certainty and strength at your foundation. The second benefit you get is one of my all-time favorites. You get the benefit of having your cash and your savings constantly compounding for you. This is what we call permanent wealth control. So think about it. In the last 10 years, how much money has flowed through your life in the form of income? If you've been making $50 or $100 or $200,000 per year for the last 10 years, that could be anywhere from $500,000 to $1 million to $2 million that has flowed through your hands. And the question I would ask is, how much of that could you access and write a check for today? And the answer that I see all over the country teaching this stuff is typically about 5% of that. Now, I'll tell you, the whole life policies I've owned for over 10 years, my number is over 100% of those dollars that have flowed through my life, I still own and control. And the best part is I'm still constantly compounding on that full cash value every single year. It only goes up. This is a really unique benefit that you'll never see your savings go down in the future. Third benefit is liquidity. Life insurance, if it's set up properly, structured for you and what you're trying to accomplish, is a very liquid asset. And liquidity is important for 2 reasons. Because it's your financial buffer against future events. That could be a recession, a lawsuit, an accident, a death, a divorce. It could be a lot of different things. You need liquidity in your life to protect yourself. Now, when those events show up, it could be the 2008 recession that might have hurt a lot of people. But if you survived 2008 and you went into 2010, 11, 12, real estate was so cheap, at least here in the Phoenix area, you would have made a fortune if you had access to cash buying up real estate at such low prices. So liquidity is twofold. It's kind of like your brake in your car. It protects you, it helps you control, but then it also allows you to put down the acceleration when you need to move quickly on opportunities. So if you look at the 3 first benefits, we got guarantees, we got constant compounding, and we have liquidity. This is why we would never call whole life insurance an investment, because of the 8 benefits, the first 3 have certainty and accessibility. Those are the benefits that you would characterize savings environments with, which is why we'd never classify this thing as an investment. Now, the next benefit you get is this flexible loan provision. So as my cash values are constantly compounding and they're always accessible and liquid and available to me, I'm able to borrow against those cash values using a very flexible loan provision that would come from the insurance company. You could look at this as a guaranteed line of credit. And nowhere else in the financial world have I found an option where I could have a guaranteed line of credit no matter what my financial situation looked like. Let me put it to you this way. The best time to borrow money from a bank is when you don't have to qualify and you don't need it. As soon as you're in a financial pinch, a lot of your potential lines of credit could completely disappear. You always have the option to borrow against your cash values with your insurance policy, and the greatest part is it'll come in the form of what's called an unstructured loan, meaning it is completely private, there is no repayment or amortization schedule, and the interest rates are incredibly competitive, especially considering how flexible that loan repayment schedule is. You will not find another loan in the financial world that can compare to a life insurance loan provision. This really gives you ultimate control. Now, caveat with if you're watching other content on infinite banking or whole life insurance online, this is probably the most talked about benefit. And once again, it's why you got to get on our Tough Money curriculum. If you don't have the right financial management disciplines, this type of flexibility and creativity in your financial world can actually harm you. This is like putting a credit card with a huge balance on it or a huge limit to an 18-year-old that's not disciplined yet. That can be a dangerous tool to put into an 18-year-old's hands. So what we tell you to do is get disciplined, make sure you're tough with your cash flow management skills, and really understand how the loan provisions on contracts, insurance contracts work, and it'll keep you really safe and protected. The next benefit is privacy. One of my favorites. Over a decade ago when I was buying whole life insurance, I was buying it because I liked the yield that it gave me. So it had a great competitive yield. It was guaranteed. I could borrow against it. I really liked those benefits. Those were kind of like the main ones. Well, now I'm a little bit older. I've got more life experience. I've got a beautiful wife. I got 4 beautiful kids right now. And privacy and the death benefit of these policies are more important to me ever at this stage of life, whereas over a decade ago, I wasn't really focused on those benefits. So now that I have a little bit more success than I did over a decade ago, having more of my financial life private is extremely important to me. And so these benefits will show up at different points in your life, but think about how unique this asset is. The next benefit is the monthly cash value growth. Now, every single month, hopefully you're tracking your net worth, you're tracking your burn rate, your liquidity reserve, so you have a really good idea of what your financial scorecard is. And one of the greatest parts about this is every month you're going to see your cash position on your balance sheet, that green box. You're going to see this go up every single month. And it's guaranteed. And so we look at this as, banks would call this an improvement to their income statement. This does not show up in the financial world. You know it's there and it's always accessible. So it's off the grid of the IRS because it's not an investment. It's there to replace your human life value. If something were to happen to you early, that's why you have life insurance. But if you understand these unique benefits and how to use them to your advantage, most consumers would call this the world's greatest savings account, which it is not. It is not a savings account. It is life insurance, but it is very common to compare this to other liquid, safe assets like CDs, checking accounts, savings accounts. Now, the 7th benefit you get is the income tax-free transfer of wealth. This is the death benefit. So not only do you have a guarantee, liquidity, a great yield, privacy, constant compounding, the loan provision, you also get this death benefit for an event that you have a 100% chance of using in your life. And if your policies are structured right, which is why you need the right guide, you're going to see this death benefit increase every single year as well. And you can be really creative and strategic with how you deploy this death benefit in the future. You could use it to go to your trust to bless the future generations. You could donate a portion of this to a charity or a nonprofit. That could be a church. It could be a pet sanctuary. It's a number of different things. So you really have a lot of creativity with this. And it would almost be like a commercial bank saying, hey, we'll pay you a great rate on your savings. We'll let you borrow against it at any time with really favorable terms. By the way, if the worst happened and you passed away prematurely, we'll send your family a check for $1 million or whatever the death benefit would be. Like if they offered us that, we'd probably be more inclined to keep more of our money with commercial banks. And the last benefit is the competitive yield. This is probably, I would say life insurance is probably one of the most misunderstood assets that exist because people just don't have good education around it. And the yield is probably one of the most misunderstood benefits on how to calculate this. And really what this provides you is a very consistent and predictable, key word here, net growth for your whole life. Imagine locking in an asset that's guaranteed to grow and give you a really competitive yield for your whole life. That's a very long time. So let's go back in time a little bit and look at this competitive yield. What we're looking at is, from 2026 back to about 2002, the year 2000, right in that range. And this is the market yield on U.S. Treasuries. And if we look at this, the last 11 years, I started buying policies around 2015, right in that range. And in that time period, the interest rates on liquid safe assets like treasuries, CDs, savings accounts was basically zero. You couldn't find any place to store cash that had any type of growth rate. You can see it right there. And, if we look at this dotted line now and everything above, whole life, you're going to earn close to a 3 to 4% net rate of return over a long period of time. So what we're looking at here in blue, the blue graph going up and down, that is the yield on treasuries, which is how the interest rate's going to be calculated on other liquid safe environments. And you can see there's only a couple time points in the last 20, 25 years that we were even close to beating whole life. And by the way, the blue graph we're looking at is gross, meaning you still have to pay taxes on that amount. So if you're earning 5% in a CD or a high yield savings account, now you have to subtract out any management fees and any taxes, and then you'd find your true net number. The red dotted line we're looking at across the four, that is a net number for whole life insurance. So most good whole life insurance you can buy right now, you'll be earning about 3 to 4% every single year. So all the white space you're seeing on the screen, those are all the times that you were not only beating other liquid safe assets from a yield perspective, you were absolutely demolishing them. When you understand these 8 benefits of whole life insurance, you come quickly to the conclusion that there is no other liquid safe asset that gives you this type of benefit. And it's why I'd say you still got to use commercial banks. It's just too convenient, the liquidity, the accessibility. You need to run your business, you need to run your personal life, but I would definitely be adding in some whole life for more of that long-term storage of wealth. So just remember, before you ever buy life insurance, get educated. Always choose truth over trends, education over products, and people over profit.